Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. So in general, in the weekend we said that somewhere around this area gold could start showing some signs of the pullback. So of course we are not talking about the changing of the major trend, but tactical pullback really has chances to happen, and it might be used for scalp trading on intraday charts. In general, as I said in today's video on the cable, Great British Pound, so we could see the pullback actually across the board, not only in the gold market and in the Forex market, almost in all currencies. You could see it on the stock market as well. So market is just too tired from this recent depression that we see. It's massive sell-off across the board, and it's also need to take some break. So that might be the reason for a pullback on the gold market as well. In general, technical reasons also exist. They are really significant for the gold market. Just to remind you, recall our weekly chart. This market hits the OP and weekly oversold. This is more than enough and really good background for technical response. Actually, we have the Giordanopoly bullish stretch pattern on the weekly chart. Just to remind you what we talked about in our weekly report. Now, as we agreed to do, is just need to get short-term patterns that could point us that indeed the pullback is growing and is forming, and we could consider possible taking part in this trading. In the cross-market analysis on the 10-year yield, you could see that market stands flat, making no pressure on the gold market right now. After the some sell-off here, is also you could see it's minor. Actually, a reversal candle. Reversal sessions was on the daily chart here, and actually on the top we have two reversal candles here. So it provides some acceleration, and the forming some kind of the flag consolidation suggests that a bit deeper action also could happen on interest rates. Interest rates also overextended to the upside. Whether it's the real achievement of the Fed that by the drawing the liquidity out of the stock market, creating the conditions that makes not very attractive to more stock buying or making some additional measures, as you can see drop on the stock market significant. Whether this was the reason for this pullback and some money start flow on the bond market, which is the Fed is trying to achieve, or maybe some other reasons pure technical. But anyway, this current background is friendly for the gold. It's also support the idea of the pullback here. So from that standpoint, it's also no problems. Here we have some wash and rinse, almost, I would say, bullish reversal bar. It's just a few cents, not enough to close above the previous top. Potential overall performance here is positive for a short-term performance. For our time frame chart, we could see the upside breakout of this wedge consolidation. This is first, I would say, bullish sign that we've got here. The market actually has reached first level, 1833. Next resistance will be 1860 to 1867, which is confidence, and that might be the potential target of the pullback. Besides here, as you can see, also the previous lows. It's very interesting performance here with this wedge. Stakeholder market has made the attempt to break it down with the spike, but then return it back up. This is also bullish sign. Trend has turned bullish here, and I think that we could try to keep an eye on the same pattern as on the Great British Pound today. That might be kind of the hand and shoulders that you can see here. So market right now stands in the resistance 1833, the fib level. Unfortunately, we do not have the overbought as we have on the cable, but still performance here is not as strong here. So market is moving to the XOP, where potentially might be the neckline. And for the bullish purposes, we just could wait for pullback here, since this is the first upward direction after long-term downside performance. So retracement should be This hand and shoulder suggests this retracement, and we could keep an eye on just in the bottom of the right arm. Well, in the current circumstances, 1803 might be a bit deep, but somewhere between the 1805, 1813, somewhere 50% support maybe. That's harmonically equal to left arm. This might be the right arm, so potentially we could keep an eye on this level for a long entry. So, other words speaking, we're moving with our training plan. Keep going with the trading plan. Since we currently could identify a potential pattern that might be formed. Here, guys, probably it's also some kind of a free drive has happened. Anyway, since we already could identify the potential pattern, let's keep watching for it, and once it will be formed, we additionally discuss the possibility of the taking the long position. For a scalp short trade from this agreement area, well, guys, this is possible, but probably you also should get some clear bearish reversal pattern on the lower time frames. Drop your time frame even more to the 5-minute chart and watch what will happen there. If, for instance, market will form the butterfly, starting to form hand shoulders here, well, potentially you could try to take it as well with the potential target of the bottom of the right arm of this larger hand and shoulders, right? So as usual. But anyway, if even you're missed with this trade, it will be, well, potentially this is very small risk that you will take if you intend to take the short position here. Well, that's actually two stops that you could consider. But our primary stop is, of course, a little bit larger, since we're mostly discussing the daily chart. And follow time frame chart, we're, of course, focused on the bullish scenario, and we'll be watching for this larger pattern to deal with.